Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He points out the Dow had a reversal and that the Canadian dollar might have topped out. Bonds are also becoming front page news. Armstrong Economics founder Martin Armstrong talks about his new book and an extensive report he's done about Canada's economic future over the next few years. He also comments on efforts to bring in one world government and how that might affect your pocketbook. Publisher of the Real Estate Timing Letter, Robert Campbell, chats with us from San Diego. He digs into American real estate and tells us why he thinks gold and silver are good wealth preservers. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Always a pleasure, Jim.
Well, after weeks and weeks of setting new record highs, not the case this past week for the Dow.
Well, the Dow did manage to eke out one day of new highs, but you know what? They couldn't drag anything else up with it. On Wednesday, the Dow made this new high. S&P, NASDAQ, the Russell all failed to go along with the game on the upside. And, that's so indicative that you would have a high-profile item such as the Dow, which the public tends to watch, make an upthrust failure like that right at the top end of a move. And we've been warning that in the last couple of weeks that you should be looking to lock in some profits and have at least some protection here in terms of the downside, because all the indices on the week have ended up closing down. In terms of the Dow, it's an outside reversal week, that being a new high followed by a close below the previous week's low. So the Dow closed off 30,900, and when we look at the seasonality here of the first quarter of the first year of a presidential term, you invariably will have a high in the second half of February through mid-March, and the reversal that we got now clearly looks like that is now in place. The initial break should be down to about 30,400, so about maybe 600 points, 500 points from where we are right now. We'll see what kind of a bounce it gets out of that. But the norm would be that with a top in place, that a correction, or could be worse than a correction, should carry us into mid-March through into April. So we got lots of time here for this thing to clean itself out. And when we look at the speculative side of things of what happened here, with the Wall Street Bets group in there squeezing a lot of those big cap names with small capitalizations in them 2 months ago, that's indicative of the tail end of a run. And, even this week, we had some nice oversolds and things like GameStop, and they got a pretty good pop on the upside. Most of them, from the signals we had, jumped anywhere from 20 to 150%. So pretty dramatic, sort of a dead cat bounce after that hard break. And I would suspect that they're going back down to lower lows than they saw off of their first sell-off.
I always get disturbed when somebody uses the term dead cat bounce. It's just too graphic for me. And for people who don't know what that means, could you tell us?
Okay, well, let's just call it a waterfall with a bit of a splash.
Okay. I like that better.
Yeah, and, now it's, you fall hard, you get virtually nothing in the way of a bounce to speak of, and then you're right back down again. And those stocks that got hyped up on the upside, really, the valuations were clearly out of line. And even now with the bounces, they are still back out of line. So there's no reason to touch those unless you have to be a day trader or you've got some very short-term signals that work for you. But, you know, for anybody who's thinking about, quote, investing rather than speculating, stay away from it.
How's the Canadian dollar doing?
Well, we've had this big move in all commodities. So that was in grains. It was in the energy markets. And the Canadian dollar, and with that, you've had a weak U.S. dollar since, March of last year. And the Canadian has been a beneficiary of that. But as of this week, we got a nice sell signal here on the Canadian dollar. Having been up around 80 cents, it looks as though it should be ready for its first decent correction. Well, actually, it's had some corrections since March of last year, but we're probably due for the biggest one. And I would suspect that you're looking for something closer to 76 cents than we are at this point. The optimum would be that we're down, would be testing the 50-week moving average, probably getting one of our sequentials or springboard buy. But at the best, that's going to be over a month away from where we are right now. So for anybody who's been long Canada or short the U.S., I think it's time to flip that position around and look for pretty decent correction here. Now, the big picture, as far as the dollar is concerned, the Canadian dollar, is that everything of the last 4 to 5 years is looking like a broad accumulation pattern. So everything from 80 cents down to 68 cents. That huge base that we've got, and I'm calling it a base because of the structure, is the weekly structure here is identical to the daily structure that we had in the Deutsche Bank Agriculture Index last summer. That's a point where you have a capitulation level of selling, followed by a good bounce, then a consolidation, and you start to put in higher lows, and you get a change of character in the first rally coming off the bottom. And in the terms of the Canadian here, this rally of the last year and the ability in particular in the last couple of months to do what it has is clearly a change of character from the bear market and consolidations we've had for the last dozen years. So a pullback in the dollar towards, let's call it the 76 cent level, could end up being a very good long-term purchase for anybody who has commitments that they want to make for both business or pleasure.
We're hearing chatter about bonds, something we haven't heard anything about for the longest time.
Yeah, this wasn't even a page 16 story. This wasn't even the back page a few months ago. Now it's a front page story. And back in January, we got some major sell signals, and the high in bonds was in the summer, when rates were down at 0.5% on the long bond, and the 10-year notes. And, we had a rounding top there in bonds that started to break down badly at the end of December, early January. So we became very negative on the bonds at that point. They were around the 170 level. And we took a look and said, well, the big channel that we were in showed that there wouldn't be any support until we got down to about 161 or less. So that would have been a 9 to 10 point drop in bonds, which was a big move. And we also wanted to look at the things like the relative strength index. That should be getting down into the mid 40s, and we would want to see one of our springboards, which would become an oversold reading. And all of that came into place this week, and as of the middle of the week, we recommended that people cash in on those positions, because I think you can get a pretty good bounce in the bonds here. But if this rally doesn't really grab hold, and I don't think it will, the next good rally out of here we'll look at as another shorting opportunity. And if things are really starting to come unglued, the target on the bond will be down to 144, which will be a yield that'll be close to 3%, a long way from the 1.5% yield that we just topped out at. So we think there's some pretty big action to be had in the bond market over this next 6 months to a year.
Ross, thank you so much for chatting with us.
Always glad to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Martin Armstrong, next on This Week in Money.
Always consult your investment professional before making any investment decision.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Martin Armstrong, founder of Armstrong Economics, available online at armstrongeconomics.com. He's speaking to us from Florida. Martin, welcome back to This Week in Money.
Well, it's always a pleasure to come to your show.
Martin, you have a new book out, The Cycle of War and Coronavirus, the New Threat to World Peace and the Battle of the Billionaires. Can you tell us a bit about it and where people can get it?
Well, I think it's available now on Amazon and I think Barnes & Noble online. The publishers kept delaying it for about a year almost. Because it has Soros and Gates on the front cover, so I think they wanted to wait till after the election, apparently. But effectively, what it goes into is a history of all the various events of the cycle of war, and how effectively government really just manipulates and lies to us about everything. It wasn't just weapons of mass destruction. LBJ even made a comment about the Vietnam War. He said for all he knew that they were shooting at whales that night and Vietnam never attacked us. So, they just lie about everything to start wars, and this is the military establishment to make money. This is really the way it goes. The problem that we have is that these people think that what creates peace is having a lot of nuclear weapons. And it's not. What creates peace is economics. As long as everybody was able to really sell products to the American consumer, which is the largest market in the world, then they were able to rise up from the ashes. And that includes, Japan, Germany, and even China. So you're not going to fight with somebody, you're not going to bite the hand that feeds you. When you start putting up trade sanctions and reducing the ability to access markets, then you're disturbing world peace. And because if China no longer needs the United States to sell us anything, then it's really, then that's when, okay, fine, you want to fight, we'll fight. I mean, that's how it works, and people have to understand this. It's not nuclear per se. I mean, China, it's fairly well known now. They've spent a lot of money on EPM weapons, and they could take out the power grid and block the United States and shut down the entire internet with an EPM attack. So it's not necessarily nuclear. I mean, you take down a country's power grid, and particularly if you start moving to digital currency. I mean, we just saw that, a problem with the Fed for a few hours, and that was just a couple hours. So it could get a lot worse when there is no physical money around.
You also have a new 96-page report called Canada into 2022, The Great Reset, Fossil Fuels, and the Future into 2022. Can you tell us a bit about that and where people can get it?
That's available on our site, and it's really something that is important from a standpoint that a lot of Canadians are starting to realize. Have Trudeau just put in a proposal that's now, or just last week, to introduce guaranteed basic income. He passed a law that allowed him to declare the various different notes no longer legal tender, and he can do that to paper currency at any time at this stage.
It's looking like Biden is a war president with an attack just inside Syria. What could this mean for markets?
Unfortunately, I mean, if you just look back, other than the Gulf War, every war is started by the Democrats. And they tend to be the ones that get the donations from the military establishment. All the military contractors, they pour money into the Democrats. And whereas Trump was anti-war, and I actually had gone down to listen to him at his Mar-a-Lago place in Florida, and he was moved by the president has to write letters to everybody that dies in war. Gee, your son died for God and country. And he was basically upset about it because he said, what are they really dying for? And he stood up there and he said, they've been fighting over these borders for 1,000 years. What are we going to contribute to this? So he was pulling everybody back. That's why Bolton was against him, etc. He wanted to send in more troops. And the first thing, that Biden does, he sends troops to Syria, starts a new base there, and then attacks Iran. I mean, this is the way the Democrats are. I mean, they just, they don't really care about people's children. It's like, okay, you're going to donate to my campaign. How much, you're going to give me, and we'll do X, Y, Z. And that's the swamp.
Are central banks likely to continue to print money to keep economies afloat?
They haven't really been printing money to try to keep the economy afloat per se. It began that way, but what's happened is that they're keeping the governments afloat. You have to understand, central banks can control the short-term interest rate, period. That's it. Long-term rates, they cannot. They don't set those. So the way they have been influencing them is this quantitative easing. They step in and buy in all the government bonds, in theory, reducing the supply, and therefore that would make the rates go down. But, what they've done now is they've created a trap, and they can't get out of it. The ECB is in desperate shape. And you're seeing interest rates rising in the United States because the U.S. is the only real free market left. Whereas Europe, basically, it's a totally fake market. The government buys all the bonds. But just the government ones, of course.
At the end of the day, does growing government debt actually matter?
Yes, because what happens is that, we've published some charts on this, and before COVID, it had reached even 70% of the cumulative national debts are just interest. So it's not by, building roads and taking care of widows and orphans and stuff as they like to pretend. It's not. It just keeps the bankers going. So what we're at this stage in the game is that they can't continue to borrow. They've destroyed their bond markets by going to negative interest rates in 2014. They can't now allow them to rise in Europe, because if they rise, then the central bank goes bust. So it's just hopeless. So this is where this Klaus Schwab and the World Economic Forum come in. And people have probably seen their video that's running around with their 8 predictions for Agenda 2030, which Trudeau said he's joining on to. You'll own nothing and you'll be happy. What is that? Besides a communistic slogan, what he's doing is basically trying to pretend that they're doing this for you. We'll relieve you of your mortgage or your credit card debt and student loans. We'll forgive everything, but you won't own anything. The government will own it all then. But why are they doing that? Because they have to default. They can't continue to keep their own debt going. So the only way for them to get out and retain power is to pretend they're doing this for you, and by the way, they'll default on their own debt.
Is gold likely to see a higher high in 2021?
We have major turning points coming up in June. It's eventually you're looking at the commodities going up into 2024. In 2021, we're in this stage where people are trying to figure out what's going on. You'll see an awful lot of people saying, "Oh, gee, interest rates are going up, so the stock market's going to crash." It should go down, yes, into the first week of March or so, but we're not looking at a major crash. If you look at the entire bull market under the Trump regime, the Fed was raising interest rates from all the way up. The market kept making new highs. So that old idea that interest rates up and the stock market goes down, it's good for a short-term little play, but we're looking at really inflation. Interest rates rising is really the price of money expectation in the future. So as long as interest rates were not rising, then people were not expecting inflation. So with rates now rising, we're going back to this inflationary cycle, which should go up into 2024.
Could silver revisit its old high of $50 this year?
I don't know about this year, but going into 2024, yes.
Are we likely to see higher crude oil prices?
Yes, mainly because these people are trying to cut off supply. So, it's just hard to even describe how stupid these people are. Nothing in the universe is ever reduced to a single cause and effect. It's always a complex thing. And this idea that, it's CO2. Well, your pet dog breathes out CO2. We breathe out CO2. So, this comes back to them wanting to reduce population and stuff, and killing all the cows and don't eat meat. So, they're not breathing out CO2. But in the process of what they're doing is they're trying deliberately shutting down pipelines. They're trying to do everything they do to cut off the supply. As that happens, the price goes up. There is no real alternative. These alternative energy things, that sound very nice, but, it's been shown. Just look in Germany. The electric buses didn't work because they got too cold. I've been up to Edmonton when it was like 40 below. They didn't shut the cars off because if they did, they wouldn't start again. As long as they kept running, they were warm and it was okay. Electric engines don't necessarily perform the same way. So the power grids, look at Texas. You have to have special apparatus on these wind turbines to prevent them from freezing. And even that's going to be questionable up to a certain degree. But Germany, people are freezing. They got rid of all nuclear power. They've been shutting down coal power. They're trying to move all to wind and solar. And, with 4 feet of snow, the solar didn't work and the wind turbines froze. So people are really seriously, freezing over there.
GameStop and silver short squeezes, Reddit, Robin Hooders. What's really going on there?
Look, this is part of really this anti-establishment movement. And, some people were calling it Trumpism, but it's not. It's been going on for decades, and it's just been building. Years ago it was Ross Perot, then it was Pat Buchanan, then it was the Tea Party, then there was even Occupy Wall Street, and this GameStop thing, they're taking down the hedge funds. It's always this anti-establishment position. And this is why both Republicans like McConnell didn't like Trump. As you know, I've, been advising different governments around the world, and I can tell you after Ronald Reagan was elected back in 80, they didn't like him because he was a state governor. They don't like outsiders. And back then they were going, all right, fine, we're going to have to train them. And this is why, Republicans and Democrats didn't like Trump. He's not one of them. Coming in saying he's going to drain the swamp. How dare you? This is where we feed. It wasn't just Hillary Clinton with her foundation. John McCain had one too. In fact, John McCain is the one that took Hillary's dossier that she had faked up on Trump and handed it to Comey at the FBI. So, they're both in this. It's not necessarily Republican versus Democrat. It's like they're all feeding from the same trough. So that's really what you're kind of looking at, and this is a trend that's starting, and you're really looking at the fact that the confidence in government is collapsing. Interest rates are suddenly rising because Biden took power. That is being seen internationally is more or less the same thing as Jimmy Carter. When Jimmy Carter in the 70s was president, and it looked like he couldn't do anything right. The confidence in government collapsed. Gold rallied from 100 to 875. All right, in 4 years. So we're looking at the same thing with Biden. Suddenly interest rates are now rising. Expectations of inflation are coming. All because he came in. It's the same thing. They see him handing out, bonus checks to illegal aliens. He rescinded, Trump, stopped paying for abortions outside the country. Biden, reestablished it. Why are we paying for people's abortions outside the country? Obviously, the answer is trying to reduce population. But, this is absurd. Whatever Trump did, Biden has gone down the list and tried to revoke absolutely every one of them.
Are interest rates the elephant in the room?
Yes. Look, the U.S. rates are, like I said, they're the only real free market. As long as we see this at this stage in the game, short-term rates, they've got, doubled here. So, it's showing that where people basically have to actually bid for things, they want more of a return because they expect inflation to come. Whereas, as in Europe, the government just keeps buying the bonds at negative rates, and nobody else would even dare touch them. What pension fund could buy, a 30-year bond at negative? They need 8% to break even. This is absurd, completely absurd.
Does it look like the Great Reset is well underway in Canada, and what exactly is the Great Reset?
It's basically it's a merger of several philosophies. One, you have the climate change agenda, and that's coming mainly from Gates. You then have this one world government idea, which comes from the Open Society of George Soros. So if you look at the 8 predictions in Klaus Schwab's video, it says the United States will no longer be the superpower. It will be shared among nations. That's the UN. They want to hand all the power to the United Nations. And it's just not going to work. I mean, China and Russia are not going to do this. But unfortunately, this is the philosophy. It's the same philosophy that created the EU. That if there's only one government, then that would eliminate war, and that's just simply not the case. And then you have Klaus Schwab throwing in here his communistic ideas, the stakeholder economics. Basically, it's fraud, because why would I invest in the company and then the company is not going to take care of me? It's going to basically hand out money for political purposes, of which I don't even get a deduction for. I mean, it's nuts. The CEO of a corporation has a fiduciary responsibility to the people. He can't take their money and simply, I think, that's a good cause, I'm going to give it all to them. I mean, it's illegal. It's fraud. You're stealing. Yet, Klaus Schwab has put in this, stakeholder, they should be, have some sort of like a social agenda, the same as the government. That idea first emerged in 1932, before there were social programs. And at least made sense then. Ford tried raising, basically all sorts of different things, and wages, etc., to take care of people. Then in 1935 is when we come in with the social programs, Social Security, etc. So stakeholder economics basically fell apart. It was not organized, and then you're right back to where you were with that again. So it all depends on what particular CEO and what's his favorite charity to start taking your money and give it to somebody else, so he can appear to be some magnanimous, wonderful guy. I mean, it's absurd. But this is what Schwab puts out, and then you get into this equality idea. And we're all equal in rights, but not in talent. It's just because somebody can do a brain surgery and that's worth more than somebody that can, just simply, take care of acne or something. I mean, you're paid according to your talents, not, anything else. I mean, I think the most simple example of this, because they sell this particularly to kids in school, and just ask them this. Say, okay, fine, you got an A. Well, we're going to give you a C, and we're going to give the extra 2 points to the person who flunked and got an F, so he gets a C, and that way it's equal and everybody passes. Now, this is medical school. Do you want to have the one that had the F work on your heart, or do you want the one that really had the A? It's when you put it in non-material perspective, they go, well, no, I don't, I want the guy that really knows what he's doing. All right? Material basis, he should get paid more than the guy that flunked.
Canada's energy sector versus the Great Reset, who do you think will win?
Look, eventually, you're looking at prices going up dramatically. People are going to be freezing. I think that it's likely more to produce separatist movements that are going to be successful. We're looking at separatist movements just about everywhere. It's not just Alberta and in the West. But look, when the problem stems from the Great Depression, really, when the central bank was created, after the panic in 1907, the Fed had 12 branches, and each branch was independent. It was to manage the capital flows, because some sectors are commodity-oriented, other sectors are more retail, service-oriented. So in Roosevelt, basically in 1935, usurped all the power of the Federal Reserve and stuck it in Washington. He removed that domestic fiscal management. And so then you have your central bank in Canada was raising rates because there was real estate speculation in Toronto. But at the same time, there were commodity producers that he was putting into bankruptcy. One interest rate does not fit all. We are different economies. And Alberta is correct. They get the short end of the stick all the time, because you're looking at the Trudeau government could care less about them. And and even John Kerry, miners should learn how to make solar panels. First of all, you're assuming they can make such a transition in manufacture. Second, that there would be an available job in their location to do that. Or then do they have to sell their house and then migrate to some place to try and find a job? The solutions these people put out are very, elite. And, it's what they basically talk about in sitting down in a 5-star hotel drinking, wine. It's like, oh yes, that should be better. Yes, I agree. They've never gotten their hands dirty themselves. They've never had to work for a living. Everything's just handed to them all the time. So this is unfortunate, but, the people that really can do, they say do, and the people that can't teach, well, the same thing applies basically to politics. I've never seen a crop of politicians as we have today. They're just terrible. At least, 20 to 30 years ago, I could sit down and I would actually have conversations with heads of state, like Margaret Thatcher. She's very intelligent. Today, you're going to meet with their chiefs of staff because the guy that's standing out there, he's just reading a script, and if he does well, they give him a cookie. That's it.
Much like the way they use fashion models to sell cars. I bet you if you asked them questions about the car, they wouldn't know anything about it.
Yeah, exactly.
It's
like, you buy a nice Ferrari. Do you get the blonde that's sitting on the hood too, or what? But this is absurd. This is unfortunately what it is. What qualifications does really Trudeau have? Or Biden? None of them. They've never done anything.
Martin, one of the few jobs in the world you don't need a certificate or a diploma for is politician. Should there be a test?
Absolutely. Look, they tell these kids, you have to go to school, you can't get a job without a degree. Should just say, well, I don't need one. I can be the head of the country without a degree. Or even a high school diploma. Nothing. How
does big government benefit Canada?
Big governments are collapsing everywhere by their own weight. There's a perfect example. Just look at New York City. They destroyed a lot of their business, the theater district, etc. So when a store is suffering from a loss in sales, what do? They have a sale. They cut prices to try and stimulate. What does government do? Pelosi in New York City? Oh, okay, fine. We're not making as much money, so let's raise the tolls into the city because there are fewer people coming. Oh, okay, that's a good idea. So so it's up like 10% because they're making less money because there are fewer people. So what do? You keep going in that. They never reduce the size of government. Never. All they ever do is add to it and increase their benefits, and we have to pay for it.
We'll have more with Martin Armstrong when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Martin Armstrong. Martin, is there a likelihood parts of Canada will separate and join the U.S.?
I don't know about joining the U.S., but separate, yes. And I would think that, we're seeing some separatist movements here, even in the United States. I wouldn't recommend that, they join the United States. I know they go, they would be without support, whatever. Not necessarily true. If Alberta adopted a real economic reform, income taxes are really no longer necessary. Taxes were necessary when money was physical, like coins or something, and you had to get some back. Today, what's the point? Yeah, they tax, okay, fine, but then they still spend twice that what they take in. They just, create the money. So why do we have taxation? It's no longer necessary at this stage in the game. It's only necessary at the state and local level, not federal. If Alberta wanted to separate BC, eliminate income tax, and offer citizenships, and you'll be surprised how many people from around the world will be knocking on your door.
I think Vancouver's already seen that.
You'll get other than just the Asian clientele.
Could there be a point when Canadians should flee the country?
I think normally you would have to say yes. The real question is where to. When Europe was going through this, everybody fled and came over here to the Americas. Now the crazy people came and to the Americas, and they're doing the same thing all over again. I have friends that fled from behind the Iron Curtain, and they come here and they go, "This is exactly what we were running away from." It's pathetic, but the problem you have to understand between the left and the right. The right is generally, you leave me alone and I leave you alone. The left can't sleep at night because they're worrying about what somebody else is doing. This whole agenda, like the Great Reset, they can't, their view is they must control the entire world. And this is the explanation for why the UN, we need a single government. Because one government itself can't solve the climate crisis. So it's going to take everybody together. So the only way to do that is by an authoritarian one world government that dictates to everybody. This is the solution of the left all the time. When communism came in, we have to take everybody's assets. Not just some, everybody. They have to control the entire situation. And we're seeing this already in what they're calling the cancel culture. If you disagree with them, you're thrown off of every platform around. So they do not tolerate dissent. They do not welcome any kind of a debate, and they're very anti freedom or anything to do with democracy. They don't believe in it.
Is Florida a Canadian-friendly state?
Yes, I see an awful lot of cars here from Ontario, actually, and there's a guy that just lives down the beach from me, which apparently just built a house, and he has one American flag and a Canadian flag on two flagpoles.
So you would call that friendly?
I would say so. There are an awful lot of Canadians here, and also British.
What would have to happen to make you bullish on Canada?
I don't know if there is a situation of getting bullish on a country other than I think between now and 2032 we're looking at individual markets, and the confidence in government in general is declining no matter which one we're talking about. So it's beyond any real hope at this stage. Trudeau's a basket case. Just look at all these world leaders that they go over and they basically, kiss the ring of Klaus Schwab in the World Economic Forum. It's absurd. I mean, to listen to Trudeau and saying he's joining the Agenda 2030, this is not something that has been given to the public to vote on. This is our problem in the West. We do not live in democracies. These people can stand up and say, vote for me, and everybody's going to have this, that, the other thing. Then they get in the office and do exactly the opposite. We live in republics, not democracies. A democracy is more like Switzerland, where you get to vote on specific issues. We are never given that opportunity. It's the same thing as what you'll see online. Click OK to proceed. You agree with our policy. You have no choice. This isn't a choice. You either accept our tyranny or you're blocked. One or the other. That's not a choice. All right? You can't say, no, I don't want my name to be used around and sold to everybody and their brother. And, it's what's happened in big tech is just an example of what's taking place. We have no choice. There's no freedom. They're now coming down on social media everywhere. You got YouTube removing people whose testimony was before Congress. This is a public forum. And you don't like what they said, so they remove them. This is not democracy. This is not freedom. This is not a country that I would have ever expected that I'd be living in, honestly. This is like some communist regime that's developing. And these people are like, well, I am right and everybody else is wrong, so we're going to deny everybody else any right to even question what I'm saying. And the Great Reset, the New York Times said, oh, it's a conspiracy theory. When Klaus Schwab is calling it the Great Reset. It's just amazing.
Well, it's not a theory when the world's wealthiest people get together every year in Davos, Switzerland, and come up with agendas that they make very public.
Exactly. Basically, anything to do with, they call it immediately a conspiracy theory if you object to them. But all I do is look at Schwab's own video with his 8 predictions. The United States will no longer be a superpower, it will be shared. That is a one world government. And he goes into democracy. Well, we'll have to retain some of the things. He's basically saying, why would you retain anything unless you're getting rid of it?
Well, and would this one world government be a democracy, considering that most countries in the world are not democracies, if in name only?
No, Europe is not a democracy. If you look at the way they structured the EU, you get to vote for Parliament. That's very nice. All right, but Parliament has no power to overrule the Commission. All right, the Commission never stands for election. The head of the EU is appointed by the other members of states. They never stand for election. And look, I've shaken hands with Klaus Schwab. I'm not talking about something, some people I've never even met. Klaus Schwab, basically, just look at who has been on his board. The head of the EU right now is a board member. Christine Lagarde, head of the ECB. He's the one that had her put in as the head of the IMF. All right, the head of the IMF now is also on his board. He has Europe in his pocket. All right, he's moved on to Britain. He's moved on to even Trudeau. These people, they get down on their hands and knees and they kiss his ring.
Could the Trudeau government be successful in eliminating paper money?
Well, he'll basically just outlaw it. That's what's coming. As of January 1st, he has, made all the other notes, that they've been no longer printing. All right. he withdrew the legal tender status from them, which means that they're no longer really money. You can deposit them in the central bank and they'll accept them, basically redeeming them. But they're no longer legal money. But in order to do that, he had to pass a law saying that he had the power to declare money no longer legal tender. So he can eliminate and will eliminate all paper money, period. This is their idea. And then everything they see will be in the bank, and then they can tax and just take whatever they want at that point. It's important to understand the German hyperinflation. It began in 1923. Why? In December 1922, the government did a forced loan. They confiscated basically 10% of everybody's assets, and they handed you a bond, which you can buy on eBay. I mean, they defaulted on those too. And once they did that, that's when the hyperinflation came. People have got it backwards. Oh, the hyperinflation came because they printed money. No, they printed money because basically the confidence of government collapsed. Once they stole 10% of everybody's assets, nobody wanted anything to do with government anymore. Then whatever cash you had, immediately spent it, and you converted it into anything tangible. If it was art, coins, stamps, real estate, virtually everything. And that's sort of what we're seeing. This GameStop type thing is not unique. If you look at every other area, art's going crazy. I mean, they even sold the first edition of Batman comic book for $2.2 million. There was a Roman coin of Brutus on the back with two daggers and a cap saying, "I killed Caesar on the Ides of March." It was estimated $500,000, brought 2.7 million pounds. I mean, things are just going absolutely crazy. So it's antique cars, the same thing. A lot of cars, like you take a Ferrari from the 80s, they've doubled in price in less than a year.
With election fraud a subject of concern around the world, should Canada do forensic audits on elections at municipal, provincial, and federal levels with the hope of proving Canadian elections are fraud-free?
Yes, I mean, look, if we can buy from Amazon online secure, why can't we vote? Unfortunately, the reason is that as long as we have to go through their machines, they can change the vote at any time. I think Mark Twain basically said it best. He said if voting really counted, they wouldn't let us do it.
With blockchain technology, isn't it possible for us to have direct democracy where every citizen has a right to vote on important issues instead of politicians who, it seems, are out to feather their own beds and fill their own pockets with change without considering what's good for the people who elected them?
Yes, look, it's at this stage in the game, career politicians should be outlawed. I mean, Trump was running initially, talking about term limits, and a lot of people cheered on that alone. But, you know, you take Biden, I mean, what job has he ever had? You know, he's been there in Washington forever. And there was an old Democratic senator used to live near me in New Jersey, and we were out to dinner one night, and he was talking about, you know, Saddam Hussein and oh, he's a dictator, he's been there for 35 years, and I turned to him, I said, well, haven't you been in the Senate for 35 years? And he just looked at me, yeah, but I'm elected. I said, well, so is he. You know, I mean, I don't think he's ever had a job, you know, and so, I mean, this is the way it is. I mean, personally, I mean, they bring nothing to the table. Or don't have some real world experience. Forget it. So, I mean, I've had to deal with governments around the world. Issues, you have to try and explain in the most rudimentary manner to these people, because they don't get it. They really don't get it.
We keep hearing about the coming of food shortages. Is Canada in a good position to feed itself?
Not necessarily. I mean, even in the case of the U.S., I mean, Europe is already warning that they're about food shortages because these lockdowns have destroyed, in many cases, or seriously disrupted the supply chain. I mean, you can go on YouTube and see there, farmers had to plow their entire crops underground. They couldn't get them to market. Another one was on there I saw. He had to kill over 30,000 chickens because he couldn't get them to market. It's pretty pathetic. I mean, personally, I ordered a refrigerator in December. I don't get it till March sometime. And I said, why so long? They said, oh, well, the chips have to come from Thailand. I said, oh, okay. The supply chain, when you lock down everybody, you really destroyed a lot of the fundamental principles of the economy. And this is impacting in food dramatically. China has now created an emergency fund to stockpile food. So, I mean, this is coming. And whether, these people can talk about global warming, no, we're going into a colder period. And each winter is getting, very, very severe. Probably the worst we're going to see will be after 2032. But, it's going to get very, very cold again in like 24 to 27 period. These are easily looked at. I mean, we put it on our blog. It's basically the jet stream dips down, depends upon if the high pressure is on the north side or if it's on the south side. And we have all the data going back. It's a very clear cycle to it. It's about a 17-year cycle. So we're headed into cold, not warm.
Yeah, I just saw a documentary from the BBC who talked to the world's top solar scientists, and she says we're going into a solar minimum that'll last until 2050.
Yes, I mean, what you have to understand about solar minimum is it shifts the type of energy output from the sun. The gamma rays increase, and there are correlations that show that it's during solar minimum is when you start getting a lot more earthquakes and volcanoes, because that type of energy, they think, nobody's proven it yet, but they believe that because the gamma rays penetrate the surface of the earth, that they may be stimulating those sorts of things. Whereas in solar maximum, it's a completely different energy source, and you don't get the gamma rays as much. So it's an interesting theory, but they do clearly correlate to solar minimum. And then if you do get some huge volcano that erupts, then those are the worst times because they create what is called the Volcanic Winter. You can go online and buy a book. The year without a summer was 1816 when Krakatoa went up. It snowed in New York City in the summertime.
Could the coronavirus scare be the biggest fraud ever perpetrated against the people of the world?
Yes, I think there's no question about that. And I mean, just look at the actual death toll. It's 0.02%. That's about the same as the Hong Kong flu in the 1969, when they actually had, they didn't shut everything down, and Woodstock was in the middle of it. Okay, so if you look at the 1918 Spanish, the death toll was 3% of the population, just slightly less than that. So I mean, that's a real serious issue. This has been used for ulterior, locking people down. Nobody's, and I mean, you can go to our site. We just Google it, and you can Google it yourself. I mean, the 1918 studies show that masks never worked. And that was put out, Washington Post, so I bought a box of masks from Amazon, and right on the box it says, will not prevent a disease. So now all of a sudden Biden says, okay, fine, you have to wear 2 masks? So what? That's admitting one doesn't work to begin with. It's all basically to keep people from really socializing, forming together, which they're concerned that then that creates civil unrest and perhaps would lead to revolution, because what they are doing is trying to change the entire world economy with this great reset.
At the end of the day, are the coronavirus scare and lockdowns just another way for the elites to pick up assets for pennies on the dollar?
I wouldn't say that. I think it's just more of an agenda coming from the World Economic Forum and even the Rockefeller Foundation. The two of them, they are the leading pushers for this vaccine digital passport idea. And why? I mean, this thing is with a death toll of 0.02%. I mean, this is absurd. So there's another agenda here, and that is basically to shut down world travel. They've destroyed a lot of the hotels and hospitality industry. We had our conference in Orlando, at Disneyland at the Hilton there. We were the only people there. They were like falling all over us, like, oh, thank God somebody showed up. Usually we go there every year and it's jam-packed. This year we were the only people there. They didn't even have room service. And we basically occupied 5% of the hotel.
Is Bill Gates the de facto leader of the world?
I wouldn't say he's necessarily the leader, but he's the one that's been bribing everybody, in my opinion. He owns just about every health organization, the college that issued this whole thing to start lockdowns, and that his model was a joke. All this stuff is funded by Gates. The UN is funded by Gates. Fauci. All of it is. And unfortunately, there have been a few leaders that have come out and said that they were offered bribes. I wouldn't say Gates is the only person. I think it's him. It's George Soros also involved. And I think the two of them are the silent partners behind the World Economic Forum. And Schwab is the one taking the lead because he's built up this thing with world leaders, and they've been going there to kiss his ring for decades. So it makes it look more credible.
Are police forces and militaries around the world likely to be loyal to government leaders even if they're told to fight against the people, their friends, family, and neighbors?
Some places probably yes, other places no. We're seeing the police in Naples and Rome refusing to comply with the government and joining the people. It's starting to happen more and more in different places. Places in Germany I'm getting reports of as well. Even in Pennsylvania, outside of Philadelphia, police are not enforcing masks and things of that nature. Down here in Florida, it's like nothing really happened. Yeah, you put a mask on to go into a store and you take it off as soon as you walk out. And nobody really says anything to you anymore. I walked in one place, I forgot the mask, and I said, sorry. Oh, yeah, don't worry about it. And that's, and the police don't seem to be bothering anybody here. Florida, Biden was threatening our governor and saying that, he's going to stop people from going to Florida. And our governor, I got to hand it to him. He says he'll call out the National Guard to protect Floridians against the federal government. It's very interesting. We have less of a death rate we didn't lock down than New York City or California. So The lockdowns didn't work.
Does constitutional law matter when countries are being controlled by tyrants?
Not really. I mean, they're ignoring constitutions at this stage in the game. The U.S. Supreme Court, there were 3 judges, justice dissented, but, they refused to take that Philadelphia case. Now, what's important about it is, I mean, aside from the issue of whether the election was stolen or not, the question was, all right, clearly unconstitutional activity. The local politicians could change the rules at any time and midstream. And that was the question before the court. And the 3 justices, they dissented and they said, this is absurd. And so effectively the Supreme Court said, yeah, go ahead, you can screw around with the elections all you want. It doesn't matter.
Do you think the powers that be around the world that are attempting to take control of the people in the world will ever be brought to justice?
If they're brought to justice, it's probably going to be more of a revolution, I would say. I don't think that they would ever be arrested or investigated. I mean, I don't see that really happening. Our computer is showing an incredible, what we call a panic cycle in politics for 2022. Now, I haven't seen our computer hasn't done that since the Great Depression. So, if you just look at what's going on, the polls right now are showing 70% of Republicans said that they would leave the party and follow Trump. Then 60% of all Americans say that they prefer a third party at this stage in the game to Republicans and Democrats. So, I think this is reflecting that people are just fed up with government. This is enough. Biden's policies are just absurd. Nobody really quite gets it. I mean, you go down to the southern borders, and they're fuming. I mean, over this, it's like, okay, fine. Oh, illegal aliens, can't kick them out. Well, if they don't pay taxes, but they send their kids to school, then your taxes go up to pay for people that aren't even paying anything and aren't even supposed to be here. That's the real issue down in the South.
How far down the communist rabbit hole do things have to go before people wake up and stand up to take back their countries?
I think this one is a bit unique in the sense that you're going to see a lot more on the people that are going after like energy and things of this nature. They're not even fully aware how many jobs depend upon that. And you're just looking at some serious issues here. And I don't think that we're going to reach like some sort of communistic state. I think, you're going to see a lot more resistance and uprisings in Europe before you'll see them in North America, mainly because they've been really oppressed much longer, and you already had establishments like the Yellow Vest movement in France, which was well established, and they were protesting the government to begin with. So adding COVID on top of it, they were already well organized, where we haven't gotten to that area yet.
Is a sign of intelligence the ability to take in new information and come to new and different conclusions?
Yes. I mean, look, I mean, that's what life's about. I mean, what our particular idea may have been when we were 18 is not necessarily what it is today. It's the old saying that, everybody's a socialist until they reach 25 and they got to pay taxes, but, that's pretty much it. So I think you are going to see, I think, this is where we're headed.
Where can people find out more about your book and Armstrong Economics?
Go to ArmstrongEconomics.com. We believe in privacy. You don't have to register. You don't have to put in your email or anything. It's open. as a public service, and we try to keep it that way. So we're all these. It's annoying to me. You go to a site immediately. You got to put in your email to see what they're saying. We don't do that. So it's open source to everybody, so they can go in, they can read what they want to read, and they don't have to give up their firstborn.
And Martin, before we go, could you just tell us a little bit about the Armstrong Economics report and company?
Well, we basically, I would say, probably rose to international levels, mainly because we were the first ones doing foreign exchange back in the 70s. And after 71, the floating exchange rate began. We got called into just about every crisis around. And, I mean, to this day, they still don't teach floating exchange rate systems. I mean, I was asked to teach actually in 2 of the top 10 universities in the world. And I was really surprised. And I asked them, why are you asking me to teach? And they outright said they know what they teach doesn't work. And the problem is, they said also, is that nobody wants to go back to teach. I said, well, you don't. We've been, those of us that have been in the international field don't want to sit down and then teach some, 25 kids in a room. So, I mean, our system has been more from a global perspective, and I had a computer background, so we developed an artificial intelligence computer, which is really the only fully functioning one in the world. Everybody else has tried neural nets, and they've collapsed, like IBM's Watson or whatever, failed to produce anything. Ours writes reports on over 1,000 markets every day. It's been doing it for decades. So you can call up and look at markets in Romania. We cover things that nobody else in the world covers.
Martin, thank you so much for being on This Week in Money.
Well, thank you for inviting me, and stay good up there.
My guest has been Martin Armstrong, founder of Armstrong Economics, available online at armstrongeconomics.com. He was speaking to us from Florida. Coming up, Robert Campbell, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter, online at realestatetiming.com and realestatetiming.net. He's speaking to us from San Diego. Bob, welcome back to This Week in Money.
Thank you. I have to tell everybody that's listening in, though, that down here in San Diego during the winter, it's just another crappy day. It's about 72 degrees. There isn't a cloud in the sky. And, we like it a little warmer down here. So I hope I can suffer through this next 30 minutes, yeah.
Well, yeah, I live in the living hell of Canada as well, where if it snows, everybody panics. It's gone in a couple hours. The sun comes back out, and I'm counting all the flowers on my boardwalk walk.
You know what people say about weather in Southern California? That anybody that complains about the weather in Southern California has never lived anywhere else.
That's exactly right. Bob, can you tell us about the Campbell Real Estate Timing Letter and your book?
Absolutely. I wrote the book Timing the Real Estate Market. Edition number 1 was in 2002, which was 19 years ago. And that led to in that book, what I show people is how to focus on 5 key indicators that will give you advance notice of when major trend changes in the real estate housing markets are going to occur. And you can apply this to any housing market in the country with a sample size of 1 million homes or more. And then after I wrote the book, that came as quite a discovery, because I've been around the real estate business my entire life. That I I'm from a real estate. My dad built and developed spec homes for 55 years, and so I kind of followed in his shoe steps. I was born on a building site. I know how to build homes. I speculated for 10 years. So I know about that from firsthand experience. So that's what kind of separates me from everybody else is, I not only talk the talk, but I've walked the walk for the last 60 years. And so after I wrote my book, so I started writing a timing letter so to share with people so they wouldn't have to do the work themselves, where the trends are in a total of 25 or so major U.S. cities. And it's been a wonderful business for me for, 19 years now. Very satisfying. And it's the model I use for determining trend changes, thankfully, is correct 80 to 90% of the time, so it takes a lot of the subjectivity out of my part, as far as calling major trend changes. Because, left to my own devices, even smart people, are they right 80 to 90% of the time what markets are going to do without looking at key data? No, not even close. So I kind of lucked out. I developed a model that works, and it still works, and I have subscribers all over the world.
Does it look like the central bank money printing machines will be in overdrive, and what could this mean for real estate?
Well, they're already in overdrive. I mean, look what they've done. Look what the M2 money supply, which is a total of currency, which is a small percentage, but credit in the system. It has literally gone vertical. I mean, to the point where you go like, what the hell? I mean, so they are printing money, buying assets, buying debt, injecting currency, new currency in the market, at a very accelerated pace. I mean, if somebody's got a bad loan and they're on the verge of going bankrupt, just call the Fed. They'll buy that thing for you and give you 100 cents on the dollar. Now you're back to home, and the Fed can eat the losses if they ever will. So I mean, it certainly appears that way. There's no other way to explain it, because I've studied cycles and economic cycles and real estate cycles that go back 50 years, and we've never seen anything like this. So it has to be the Fed, right? Has to be the Fed. I mean, all of a sudden you go into a severe recession, and all of a sudden the stock market and the housing market, take off like rocket ships to the upside. You ever seen that happen before in the last 100 years? No. Okay, so what explains it? It's got to be the Fed. It's got to be the money, baby. They're just going like crazy, putting this stuff out. The U.S. economy is definitely on life support, and so that would be my explanation, why that's been the Fed's influence on things. What are interest rates? 0. So, I mean, so obviously now a saver, all of a sudden, let's say you got $1 million. And obviously you're a saver and you go, I'm going to live on that $1 million. I'm just going to roll, like 1 year CDs or something like that over, at 4.5% or something like that, and make, $45,000 a year on that 1 million, and my principal's, not at risk. And so all of a sudden now you get 0 on that. So you got $1 million. What are you going to do? You're going to buy stocks. You're going to buy real estate. You're going to buy gold. You're going to buy bonds. You're going to buy something, because inflation right now is not 1.6% like the Fed, like the CPI tells you it is. So far away from it. I would estimate that the true inflation rate, if it's measured accurately right now, is in the range of, 8 to 10%, which is huge. Huge. All of a sudden, new and existing car, new cars and used cars, year over year, they're both up over 10% a year. But you look at the component in the CPI, they go, oh yeah, they're up about, 1 or 2%. That's total BS. Housing prices are up 10%. I don't shop, but my wife shops. That, she tells me food prices are going through the roof. Are you going to see that? I mean, is that like 1.6%? She said, no. It's way more than that. So all of a sudden you get out in the real world, Jim, and you start looking at things and you go, don't believe any of these government reports. That's for sure. But is inflation 1.6% like the government and the Fed tell us? No. It's way underestimated. So let's say inflation's going off. Let's just use 10% as example. And housing prices year over year in the United States, the median price home has appreciated 10% in the past year on a nominal basis, which is a lot. But when you adjust for real inflation, it's probably 0. You're probably holding your own right now. Isn't that interesting how these things change and how they think, oh, I'm making so much money? Yeah, go out and try to buy a new car or buy anything new. Buy anything and see what the price is. You go, what? You know, it was half that 3 years ago, exactly.
Well, the government's solution to rampant inflation was to take housing and energy out of the CPI index.
Oh, they don't even use housing prices.
Yes, exactly.
Equivalent rent index adjustment, which is some, cockamamie, that thing where they have all the calculations where it never goes up. It almost just kind of stays like, it goes up like, 1 or 2 or 3% a year or something like that. But I mean, that's ridiculous. I mean, what percent of most people's budget is housing expense? I mean, anywhere probably between the average person, probably between 30 and 50. How about food? Yeah, there's another like 10 or 20. How about health care? There's another 20%. How about going to college or something like that? Is that going up at 1.6%? No. So the average American family, their cost of living is probably, right around 10% a year. So your house goes up 10% a year. Guess what? Ex-inflation, you're holding your own, which is better than holding the money in cash, I suppose, because then you'd be down 10%.
Even though the Fed wants to keep interest rates low, could the mortgage rates be moving higher?
Well, that's always subject to a lot of debate, and of course, I mean, all of a sudden, if we start to see inflation pick up, mortgage rates are going to start following the inflation rates for sure. Now the only thing that they have left is the Fed has to buy up all the debt. All the debt. I mean, I can't even get my brain around what would happen to that, but most likely, with interest rates being at 50 or 100-year lows or whatever. I mean, at some point they're going to turn around. And I'll tell you something, like, what are mortgage rates right now? 2.75% here in the U.S., 30-year fixed. Let's just say mortgage rates were to double, in the next year or two, and go to 5.5%, which is still below the, 50-year average. So, I mean, you can't bitch about 5.5%. Based on the way everything is leveraged right now, and the way prices are going up, housing prices would probably get creamed 30 to 40% just by that move up in interest rate, Jim.
Could the recall of Governor Newsom be good for California real estate?
I don't have an opinion on that. I just think it would be good for California, period. Probably. I mean, my God, now they're doing all this thing. You got to get rid of some of this stuff. Like here in California, they've extended or maybe even nationally, they've extended the time periods where renters, if they wish not to, don't have to pay rent, where debtors, mortgage holders, if they want to, don't have to make payments on that. And so pretty soon you start going, at what point does everything go back to normal, the real world, and we have an adjustment back to reality? So, I mean, it's that's the downside of that. The upside of that, there's an upside though. Houses appreciating so rapidly right now that, there's not likely to be short sales because everybody's got so much equity. You wouldn't have to give it back to the bank. You could put it on the market even at a reduced price and get rid of it. Interestingly, though, something else I find really interesting, and I'm writing about this right now. That's why my brain's in overdrive, everybody, because I'm writing my March 2021 timing letter. Interestingly, home mortgage equity withdrawals, which were the big thing during the housing bubble, people were borrowing against their house to live on, that even though we're not nearly at the old levels, we're only at about 1/4 the peak of the old levels, the trend, in home equity withdrawals is definitely up. In other words, people are cashing out on the equity in their home, way more today than they were like 2 years ago, 3 years ago, 4 years ago. The year-over-year price gain, it's like a 5-6 year high or something like that. So where's that going to lead to, Jim? You tell me. Is that going to be a growing trend where, that's the only thing people have left is the equity in their house and they got to borrow it out in order to survive because the job market sucks?
What's going on with California real estate and what's going on with real estate in the rest of the U.S.? Is there a difference?
The rest of the U.S., NAR, National Association of Realtors, we're up 10%, year over year, which is fine. California uses median price. We're up more than that. We're probably up in the 15 to 16 to 17% year over year range. That's for median prices. Now if you just look at, repeat sales prices like Case Shiller and CoreLogic uses, that's around the 10%. And I like that number better versus median, because here in California, what's selling, why the median's going up so much more in California than on a national basis, is that homes in the $1 to $2 million range are selling better than the homes in the $400 to $500 to $600 range. So up goes, and so it's kind of it's not a true representation to what's happening to the entire real estate market. It's just the mix has changed, and the high-end homes are selling faster than the low-end homes.
Are any of the U.S. housing markets flashing a buy or sell sign?
Well, there's no sell signals. Yet. Everything is just on a rampage, Jim. So, no. In fact, interestingly, and this is something else I'm going to be writing about, that on some short-term indicators, I use long-term indicators, everybody. I'm flying at 35,000 feet looking at the macro picture. If you want to look at the micro picture that changes much more frequently, look at metrics like, time on market statistics, percentage of homes that have to drop their price before they're sold. And those are two very short-term indicators, very volatile. But right now, both those indicators are at historic lows, which shows you the momentum in the market right now is unbelievably strong. Normally days on the market or something like that is normally, you go back 10 years and take an average, it's 35 or 40 days, something like that. Use that as an average. Well, right now, it's less than half of that. It's almost 75% less. You put a home on the market, it just doesn't last. And interestingly, 25% of my subscribers are in the real estate business. They're a mortgage broker, real estate agent, or whatever, builder. I'll tell you, a lot of real estate agents that, ironically right now, are singing the blues because these homes, these homes aren't hitting the market. The market is so hot, everybody. You don't have to put your home on the market. List it with a real estate agent to get it sold. People are calling you on the phone, principal to principal, and that kind of thing. And so a lot of these homes, they never hit the market. They're just sold, before a real estate agent has, before they call a real estate agent. One of my, subscribers, that he's a very successful real estate agent here in San Diego, that he has, he's been in business 30 years. He in a small office sell 50 homes a year, and he's the only salesman. So he has 50 real estate sales per year. That's a lot of money, guys. His business, even though housing sales are at record highs here in San Diego County, his business is down 50%. Unbelievable. So you go, what's causing that? Maybe it's the online business, Zillow, Redfin, but a lot of things, and there's a lot of agents getting into the market right now, brand new. So somebody goes, I'm going to sell my house, and the unemployed kid goes, I'm going to go get a real estate license and go sell it for you. And he goes, that's a good idea. And so, will that guy be around in 1, 2, or 3 years? No. But are there thousands of those people that are taking the easy money right now? Yeah. A monkey could list a home and it'll sell for over what you list it for. So the market's that hot, guys.
Have we learned anything from the Robin Hooders and the GameStop silver short squeezes?
Oh yeah, that has been a classic education in what human behavior can do to markets, Jim. The fact that we talk about GameStop, it was at $5 a share, all of a sudden the crowd, the greed crowd, they started the momentum going, they ran it up to 500, then it collapsed down to 50, and now just in the last day or two, I understand it had a 300% upward move in one day. What does that tell you about human behavior? Or investment decisions. Do you think it's driven just a little bit by emotion?
The Dow keeps hitting new highs. Is 2021 looking bullish for the Dow, or are we looking at a correction?
Well, you got to go with the trend. You always got to go with the trend. I mean, what I do, I call trend changes in the real estate markets, housing markets, U.S. housing markets, and the model I use is 5 times more accurate than the model I use to call major turning points, in the stock market. I'm just a pure trend follower in the stock market. And the trend's up. It continues to be up. I mean, if you're not long, you're wrong. I mean, it's the same as going on in real estate here in the United States and especially in California. Is real estate expensive? Yeah, it's super expensive. I mean, so what would you do right now? Would you buy? I don't know. I mean, what you should buy? If you should buy right now, you better be willing to hit the exits, fast if this thing turns south. But I mean, the momentum is certainly up. And if you already own real estate, would you sell? No, don't sell yet. This thing's still in a near vertical climb. Just hang on. But don't get complacent and think this is going to last forever, because it sure looks like a bubble to me. And if you look at a chart and you go, wow, it's a bubble. It's a bubble. Housing is super overpriced. Here in California, it's overpriced, 35% on a nominal basis. And if you adjust for inflation, it's probably close to 50%.
There's rumblings Biden will be proven to be an illegitimate president due to massive election fraud. If that happens, would it be good for the stock markets, gold, silver, crude, and the U.S. dollar?
Well, he already is an illegitimate president. If he was not an illegitimate president, Jim, do you think they'd have a 15-foot security fence built around the Capitol and the White House with razor wire on top, and both of which are the grounds are being patrolled by thousands of armed military troops? No, totally illegitimate. So, I mean, that's something else. It's like, where's this going to go? I mean, are they just going to take this? Is the Fed just going to run the printing presses even faster and faster until we just hyperinflate the economy? There's a lot of people who are talking about hyperinflation right now. See, hyperinflation is a psychological event. It's not a monetary event. I mean, the Fed could keep printing all the money in the world, and if it keeps getting passed out, but nobody spends it, there's no inflation. But if all of a sudden somebody goes, you know what the U.S. dollar's worth? Nothing. It's worth toilet paper. Then people start spending it like crazy, and, inflation goes from 5 to 10 to 15 to 20 or whatever. It could even go into a hyperinflationary blow-off. And for those reasons, that's why, for that reason and more, I continue to believe that gold and silver and commodities will be the best investment performing asset classes during the next 5 years.
We're hearing the COVID-19 virus has not been isolated. If it's true, it may not exist. If that's found out to be true, how would markets likely react?
I have no clue how they're going to react. I mean, if you'd have told me that GameStop would have went from 5 to 500, I would have went, no, it didn't. I mean, that's impossible. So I don't know. I mean, this whole thing has been such an exaggeration of the risks and everything with this COVID thing. We got a real political problem. I mean, not only does the economy suck because it continues to be locked down by this COVID crap, so now the Fed has to put the U.S. economy on life support, passing out money, free money to everybody so nobody goes broke. I mean, where's this? What are the financial repercussions of this going to be? I mean, all you can do is follow key indicators and say, look, okay, I'm looking for a point to get out of the stock market. I'm looking for a point to get out of the real estate market. I'm looking, where should my money be right now? And I continue to think it's in gold and silver and commodities.
Your thoughts on gold and silver?
Like I said, I think that's going to be the premier wealth asset in the next 5 to 10 years. I think that stuff's going to soar. Just soar. Because what can save the system? Because all this debt we're creating that nobody can pay back, and it's all backed by U.S. dollars, which makes the U.S. dollars backing it worthless, of course. What can save the U.S. dollar and save the system from economic/hyperinflationary collapse? Revalue gold at $55,000 an ounce and back the dollar by it. About 35% backed by gold at $55,000 an ounce. Gold. To a large part, the problem goes away. The dollar won't crash. The economy won't crash. And so, why don't they do that? And ultimately, I think that's what they'll be forced to do. They got to save the debt, Jim. They got to save the debt. The debt market is 4 or 5 times as big as the equity market. All those people holding all these leveraged assets out there, those are banks. that are doing that. And if all of a sudden you start getting into a bad situation where, all that debt goes bad because of rising inflation rates or something, the whole financial system would collapse. So what the Fed's going to have to do is raise, and the Fed can't buy all the debt from everybody, make everybody whole, so they'll just revalue gold, just like Franklin Delano Roosevelt did in 1933 when we were in a deflationary period, and all of a sudden you created inflation again. It's kind of the same idea, except we're doing it to save the debt this time. We need to back the debt by something, because if people lose total confidence in the debt, nobody's going to hold it. You're not going to buy a U.S. Treasury bond at 3%. You're going to buy a U.S. Treasury bond at 15%. Gee, the value of that debt just fell by what, 80, 90%? Yeah. I mean, how many lending institutions do you think can take that kind of a financial hit to their portfolio? Zero. So you got to maintain the value of that debt. You got to back it with something. That's what I think is going to happen.
How does the U.S. dollar look?
The U.S. dollar looks terrible. It's like, because you know what? It's because everybody sees what we're doing over here. What we're doing. Hell, everybody thought the euro was bad. The euro is outperforming the dollar by a mile. So the U.S. dollar, that is just, it's in a downtrend. And do I expect that to reverse? Probably not. Nope. I just think eventually this whole thing's going to turn into a flash where somebody's got to do something crazy like revalue gold to $52 an ounce, and save and back the dollar by it, so people won't be trading their dollars in for anything. They'll go, okay, that's good enough for me. That's enough backing. And so you save the dollar, you save the economy, you save the debt. The debt, you let the debt market go. The whole house of cards comes down, just about that fast. Because they can't make loans, they're all insolvent, and we live in a credit economy. All the credit crashes, then you're in really bad shape. So that's what I see as a desperate move in the end to save the system, but I expect them to do that. And that's why I think people that hold, especially gold, they're revaluing silver. It takes too much silver. Gold's worth 80 times more than silver. You're not going to revalue. Silver will go up for sure, and there may be a good shortage, and I think silver investment will do really well along with gold. But from a longer term standpoint, I think gold is the better asset class to hold.
The green energy sector is heating up. Do you think Californians will buy more and more electric vehicles? And could California real estate see higher prices due to cleaner air?
No. It's not going to. All of a sudden, the greener and greener thing gets, the worse the economy is going to be, or the taxation is going to be, or that the debt levels are going to be, to finance all this stuff. All this Green Deal stuff, it has no economic foundation underneath it. It's all a dream. To pull this stuff off would cost, $75 trillion. Where's that going to come from? It's not going to come from anywhere. That's why they're not going to do it. Unless they're just doing it on purpose, just to collapse the system. Yeah, all of a sudden, you got to do, there's oil. You can't use oil anymore. How are you going to get to Hawaii from California? What? Swim? How are you going to fly anywhere? All the airplanes are down. You know what I mean? How's the military going to operate? So that's why I just think that this stuff hasn't been thought out at all. It's all politically motivated somehow. And frankly, I just don't think about it because, if this stuff ever got going in gear, just like that experience recently in Texas. I don't know all the details, but I understand Texas is starting to go, Green Deal with windmills. All the friggin' windmills froze up. And so, like 5 million people in Texas or something didn't have energy for like a week or something like that. See, you need backup systems to all this stuff. You think this is all free energy, solar, wind and all that? No, it's not free energy. It has a big cost associated with it. The only place I can see in the United States where you could maybe able to live off of the wind and the sun would be Hawaii, Hawaiian Islands. There's always a strong trade wind out there somewhere. And is it sunny? All the time. But, even that, I haven't looked into that. But if you're looking to be self-sufficient from energy, like, the Hawaiian Islands would probably be my first choice.
Do you have any health tips for us?
Oh, absolutely. I'll tell you guys, I'm in a weight loss contest with a friend of mine. I've only got to lose 5 pounds of fat off my midsection, but I've been trying to lose 5 pounds of fat for 2 years now. So all of a sudden, I've started doing the research and said, what do I have to do to lose the 5 pounds? And here's what I've come up with. You got to eat 40 grams of carbs, only 40 grams or less of carbs a day. You got to drink a lot of water. You got to exercise. You got to get a lot of sleep. But the key is the carbs. You control your weight with the carbs. I mean, that's what causes weight gain, carbs. If you cut out carbs, you can eliminate that. So my diet has turned into a super high fat. When I get hungry, I just eat a 1 ounce piece of cream cheese. And it's got 100 calories. When you're on a low carb diet, keto diet, you don't count calories. Because once you eat fat, it fills you up. So I'm doing all these things. And interestingly, for the first time, Jim, in a year, I went to the gym today because they took all the equipment out of the building and put it in the first floor of a parking garage, so it's all open, and so that it's in there, and you don't have to wear a mask, but they do want you to social distance. So I went back for the first time in a year, and you're talking to somebody here. I've had an annual gym membership, guys, for 27 years. It's amazing. I'll be 74 years old in a couple of months. Missing 1 year of lifting weights, even though I've done other things to stay fit, you can't believe how fast you lose your strength. I mean, I'm still strong, but I mean, you got to start over again. A year's too long to go for a 74-year-old guy. So I'm real excited about that, and I'm just trying to get all this fat off my waist. I'm trying to get 6-pack abs again, and I'm on this real push, low carb, don't count diet, do a lot of running, drink a lot of water, and I bet you that that being realistic about it, for me to lose 5 pounds because I'm fit right now, it's probably going to take me at least 2 months, Jim. I don't have fat. I have visceral fat. I mean, and the only way to change that is diet. And everybody out there, the only way to control your weight is with diet. Lifting weights, does that help you lose weight? No. Lifting weights makes you hungry. It makes you want to eat more. There's only one way, and that's to stop eating carbs, which make you hungry, and so you eat less. You eat things that make you feel full, so you'll want to eat less. And that's what fats do. So it's a pretty simple formula. But the key to all this, everybody, I could write a book about how to lose weight, okay? And people have done that. Of course, that's the easy part. You know what the hard part is? Doing it. The discipline to do it. Every single friggin' day. And so that's what separates the people that are fit my age from the people that are not fit my age. And so it's just it's a real exercise in how badly do you want it? And go, I want it real bad. So you got to do these kind of things. And I've been practicing baseball. I'm still getting ready for the over 65 baseball league, but practicing baseball, that you can't believe how sore you get playing baseball. I mean, fielding grounders and throwing the ball and hitting. If you haven't played baseball in 30 years, oh my God. I mean, I go out and practice baseball for an hour, and the next day my body's trashed. I feel sore all over, but I kind of feel like I've been hit by a bus. So that's what it is, guys. I mean, look, and I'm developing new theories on things. People talk about health and things like that. If you want to make better investment decisions, think more clearly, be more on top of it, alert, have the energy to do the things you need to do. I'll tell you, whether it's, especially in the markets, whether it's to invest in stocks, bonds, real estate, or whatever, that being fit does so much for your brain. I think if you want to be a better investor, I mean, do I think physical fitness plays a big part? I think it plays a huge role. So, I mean, even if you want to look at it from that standpoint, from a greed standpoint, get in better shape. So, that's the kind of stuff that's driving me right now, Jim. Once you get to be my age, 74 years old, I've got enough money to live on. I'm comfortable. I'm not driving around in a chauffeured Rolls Royce, because I don't want to drive around in a chauffeured Rolls Royce. But we're comfortable, and now I'm just trying to say, okay, how do I keep sharp, mentally and physically, and they're tied together more closely than most people think. I'm coming to that conclusion, and so that's why I tell everybody, get in shape, guys. Believe me, there's no downside, all upside to it. So I'm just trying to lose 5 pounds, and most people go, 5 pounds? And they go, yeah, 5 pounds. And I lift up my shirt, and they go, you don't have 5 pounds to lose. I said, yes, I do. I said, yes, I do. So this is my, some people get hooked on dope, and some people get addicted to alcohol. My addiction's physical fitness, guys. So just so you know, I mean, it's like, I've always been kind of a fanatic about it, and ever since I was a kid, and still am. The only point about the difference between being like 35 and being 74 is it's 3 times harder to do.
Any investment words of wisdom for us?
I always go back to this. You've got to move your money. You've got to move your money to stay ahead of trends. That's the safest and most profitable way to invest. And by far, the number one characteristic of successful investors is that when they do make an investment, they buy when the asset price is depressed, guys. If you want one secret, there it is. You buy things when they're cheap. You might not be a good market timer. I mean, as far as like you're going to hold on for the rest of your life. You still don't know what the future is going to be. But if you buy asset prices when they're cheap on a major correction, that will put you head and shoulders above most investors as far as long-term success goes.
How can people find out more about your newsletter and your book?
They can go to my website, which is realestatetiming.com, just like it sounds, realestatetiming.com, that you can learn about my book. You can learn about my timing letter. There's a link there where you can read a sample letter to see the kind of things I do. But you can do that. So it's been a great business for me. I love doing it. You know what I love doing? I love creating something that gives me an advantage over other people. That's what my model does. It's kind of like that. I kind of feel the same way that people that if they'd let you count cards in blackjack, you take the casino's money. That's why they won't let you count cards, because all of a sudden the advantage has changed from them to you. And just using a simple timing but well-conceived timing system gives you a huge advantage over most people about determining, one, the best time to buy, and then, also along with that, also the best time to sell if that's what you need or want to do.
Thank you so much for being on This Week in Money.
Always an honor, Jim. I'm always happy to be your guest. Thank you. You take care, okay?
And you can get the latest information from Bob on his websites, realestatetiming.com and realestatetiming.net. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Martin Armstrong, and Robert Campbell. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese President and CEO Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to Company Showcase, Larry.
Well, thank you, Jim.
Larry, another busy day in your offices over the past week. What's new?
Oh, well, there's a lot of new things out there. We did have a press release out on the Biden's order, that he's going to start looking at the executive order for strengthening critical supply chains, and that affects us in 4 different areas, 4 critical metals, and we welcome that for sure. This was first started by Trump and his administration. We have a press release out on that, and we're going to attach it to this podcast, so it does better explaining what the benefits are to us and what we've achieved in the past on advancing our part in the executive order. So I would want everybody to read that if they haven't read it already. But the other big thing that's going on right now is we've gone through a tumultuous week on the exchange, and the Dow is down considerably in the last, most of this week. It's down about close to 500 points on today's close. So it's I can tell you the exact number. It's down 469. The one we watch closest is the NASDAQ, and the NASDAQ was down or up 73 points, which was a nice turnaround for us because it's been getting hammered all week, and that affects technology. So it's been quite a week. We closed at 22.22, and we expect moving ahead that all the things that we've got in the chute, such as the uplisting, we expect to hear from that at any time. And we also the spin out of shares, we expect to have meetings next week, so that I can hope to update everybody at that particular time. And we just have a lot of things on the go, and we couldn't be happier. The way things are turning out. We're up about 1,100% from 2 months ago, and we don't think that's the end all. We think that's the beginning of something. So I'm excited. I don't count my money every 5 minutes, but I do every couple of hours. And it's totally exciting out there, Jim. I couldn't say more about what we're doing. We're working away on the Wendon stockpile stuff with Cametco, and I just want to mention that Cametco is renowned. It's a renowned worldwide research firm. And they're our contractor, and they've been with us for, it's 13 or 14 years. And they've developed technology for us that is standalone. And we certainly wouldn't be where we're at today without their efficient ability to help us on everything that's going on. It's mostly difficult for companies working on their own with a couple of metallurgists trying to do things. The depth of the metallurgists and scientists at Cametco is, at least 30, 35 people deep, and so you got all kinds of people you can lean on if you hit a problem. And you're always going to hit a problem on R&D. That's research and development, and a lot of R&D has to take place. We've spent probably amongst the two projects that we have had R&D with Cametco, close to $20 million, and it's money well spent. So, and we're very astute at making sure that if a problem develops, that we cover off that problem. We could have probably had a commercial plant built by now, but it might have been inadequate, and it certainly would have been technology that would be considered yesterday's from the technology we're working on today. So these are the things that keep us, not up at night, but gives us a good night's sleep, knowing that our intellectual property is being herded by a company such as Cametco. And, I've had metallurgists work for me in the past, but, I didn't feel with Cametco down there that we needed a metallurgist on staff. Certainly our CTO is a mining engineer and understands what's going on. So we're in good shape, and, we're looking forward to the events that are going to unfold in the next 2 or 3 weeks. and that's going to keep us humping. And I'm sure that more regulations will come in around the world that will assist in recycling, and the standards for recycling and what you can expect from recycling. And I think that we're probably the most transparent company out there. I get questions from people all the time about what we're doing, and it's astounding that they haven't even looked at the site, that they know exactly what we're doing and how we've progressed over the last 4 years. But anyway, that's people don't take a deep dive. We've had a couple of peer-reviewed articles that substantiated our process. So anybody out there that sends me an email and says, are you a pump and dump or whatever, I can't believe it. And but anyway, we're not pumping, we're not dumping, and sure, people are letting go of a few shares here and there, but a salary's a salary. And some people live above their salary and have to, beef that up by selling a few shares now and then, or they run up debts for 5 years like I have to keep this company alive before we kicked off in 2016. And, I've got to pay those debts, and I'm not a kid anymore, so I have to make sure that I've got enough cash on hand to live through another 5 years. So that's the kind of what it's all about today. I know that I'd like to be announcing that we are already uplisted. I'd like to be announcing that we've got the green light for the spin out, but I don't have those yet. So I wish everybody a great weekend. This is a short podcast, and it's exciting. I mean, I'm excited. It's hard to focus on things when you've got lots of activity going on around you, lots of phone calls, lots of emails, lots of interaction that goes on when you have a market that is alive and well. And so that's about all I can say. Next week I hope to cover off on a few more things. But I am excited about the market. I have a little board here where I buy a few thousand shares in it, and one of them I put up on the board at 13.5, closed at $1 today. And so that's my part time. And I usually don't stick around for the top. I'm only in there to see if my forecasts are correct, and if my forecasts are correct, I take my money off the table long before it matures. But to see this sort of thing happen, I haven't seen this happen since 1980, and that's a long drought in between 42 years, and so it's exciting for me anyway, Jim.
Larry, for people new to American Manganese, what's the company all about?
We're a critical metals company, and as explained in this press release, we cover off a lot of things that the U.S. has no sufficient quantity of or has no production of. And so that's the goal that we try to fill, and we try to fill that with manganese, which in my opinion is the most critical metal out there, because you wouldn't have a frame for a car, you wouldn't have steel girders, you wouldn't have tanks, you wouldn't have trucks, you wouldn't have anything if you didn't have steel. And so I see that as one of the major things, and that's the thing that we patented back in 2012. And we've taken that patent and worked it through to actually include the cathode materials such as nickel, cobalt, manganese, lithium, and in our recycling program. So that's how the recycling idea got started, was right from our manganese project. Now they're both active, working for the U.S. government, and we have a website out there where you can do a real deep dive on a due diligence if you want to, and that website is AmericanManganeseInc.com. We're traded on the Toronto Stock Exchange Venture under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. Contact the company at 778-574-4444. You can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on February 26th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.